Welcome to NeoNexus. Subscribe and hit the bell icon for the latest updates. Today we're diving into a seismic shift in the global auto industry, triggered by BYD. In May 2025, BYD, led by CEO Wang Chuanfu, announced aggressive price cuts that sent shockwaves through the market. This wasn't just a price drop, it was a declaration of war in the electric vehicle space. The impact was immediate. BYD's stock fell 8.6%, Geely's dropped 9.5%, and panic spread across trading floors. Investors braced for a brutal price war, knowing profits would be squeezed and weaker players might not survive. But BYD's announcement wasn't just about slashing prices. They unveiled a plan to cut battery costs by 30% in 18 months and boost EV range by 40%. This move could make long-range EVs as affordable as basic gas cars, a game-changer for the industry. The warning signs were already there. Great Wall Motors CEO, Wei Jianjun, had recently compared the auto sector's price war to China's Evergrande property crisis. He warned that desperate cost-cutting could compromise safety and reliability. BYD's Bombshell confirmed those fears, signaling a new, riskier phase in the battle for market share. The entire supply chain now faces unprecedented pressure. The industry is at a crossroads: innovate or risk collapse. BYD's bold strategy has forced every automaker to rethink their future. The auto world will never be the same. BYD's latest move? The Seagull hatchback, now just 55,800 yuan, about $7,765. That's the price of a high-end e-bike in some countries, but here it buys a full-fledged EV. This isn't just competitive, it's a bid to dominate the entry-level market. Competitors are forced to slash prices or risk losing massive market share. The result? A race to the bottom, with automakers sacrificing profits for volume. S&P Global Ratings and even China's state planner have warned about the dangers of selling below cost. The pressure is felt across the supply chain, from parts suppliers to raw material providers. For consumers, EVs have never been more affordable, but the relentless focus on price could mean corners are cut on quality and innovation. The industry is walking a tightrope, balancing affordability with sustainability. Will this strategy build a lasting market, or is it a house of cards? Only time will tell. BYD's ambitions are global, with Europe as its next big target. The company is building a massive EV factory in Hungary, set to open by late 2025, bypassing EU tariffs and embedding itself in the European market. BYD is also establishing a European HQ and research center in Budapest, hiring over 2,000 engineers. The results? In Q2 2025, BYD became the world's top seller of battery-powered cars, outselling Tesla globally and in Europe. After selling 4.25 million vehicles in 2024, BYD aims for 5.5 million in 2025. Its rapid-fire product launches, about 40 new models since 2020, leave Western automakers scrambling to keep up. The Seagull, for example, sells for under $8,000 in China and around 20,000 euros in Europe, half the price of a Tesla Model 3. BYD isn't just entering new markets, it's rewriting the rules. Its aggressive expansion is forcing legacy automakers to rethink their strategies. The pace and scale of BYD's growth are unprecedented. Europe is just the beginning. The global auto landscape is being redrawn. How does BYD keep prices so low and innovate so fast? The answer: vertical integration. Unlike most automakers, BYD makes nearly everything in-house, from batteries to semiconductors. This gives BYD a 25% cost advantage, according to UBS, and shields it from supply chain disruptions. BYD even operates its own shipping fleet, controlling logistics and costs worldwide. This closed-loop system enables rapid innovation and cost control that legacy automakers can't match. Engineering teams collaborate seamlessly, integrating breakthroughs into new models almost instantly. Vertical integration fuels a cycle: lower costs, aggressive pricing, more R&D, and faster innovation. It's a self-reinforcing advantage at the heart of BYD's success. Competitors are struggling to catch up. BYD's edge isn't just price, it's relentless battery innovation. As one of the world's largest battery producers, BYD's Blade battery set new standards for safety and energy density. Now, BYD aims to cut battery costs by 30% and boost range by 40%, making long-range EVs affordable for all. Imagine a $10,000 EV with over 400 miles of range. BYD is making it a reality. The company's new flash charging tech promises 250 miles of range in just 5 minutes. This brings EV charging close to the speed of filling a gas tank. BYD's vertical integration lets it rapidly implement breakthroughs, outpacing rivals tied to third-party suppliers. Manufacturing and R&D work hand in hand, creating a powerful feedback loop. The result? BYD stays a step ahead, setting the pace for the entire industry. The future of EVs is being built in BYD's labs. BYD's growth is staggering. Revenues soared 27% in 2024 to $108 billion. Warren Buffett's early investment gave BYD global credibility, but rapid expansion has come at a cost. Official debt is $5.67 billion, but supplier debts have ballooned to $54 billion over 5 years. Reports of delayed payments raise questions about financial sustainability. BYD's strategy: prioritize market share over short-term profits, a high-stakes gamble. The price war is pushing margins razor-thin across the Chinese EV industry. A sudden downturn or credit crunch could expose serious vulnerabilities. CEO Wang Chuanfu, a chemist-turned-visionary, is betting on long-term dominance. The challenge: keep innovating and expanding while managing mounting debt. The stakes have never been higher. Made in China once meant cheap and low quality. BYD is changing that narrative. The company's global success is forcing a rethink of Chinese manufacturing and innovation. BYD is exporting not just cars, but advanced technology and a new vision for mobility. This mirrors Japan's transformation from low cost to high quality in the 20th century. BYD's rise signals China's ambition to lead in high-tech industries. For consumers, this means more choices, better tech, and lower prices. BYD's aggressive pricing is forcing all automakers to offer more value. The result? EVs are more affordable and accessible, accelerating the shift away from fossil fuels. The auto industry is at a turning point. Legacy brands must adapt or risk extinction. BYD's model of vertical integration and rapid innovation is the new benchmark. The future of cars will be decided in labs, software centers, and supply chains. BYD's story is about more than one company. It's about a new era for the entire industry. The electric revolution is here, and it's just getting started.